To the Full Tracy Money Audio Commentary. This is Owen Tracy recording. It's 3:22 p.m. that is Central Time, and today is February 12th. We've had quite a lot of volatility today, and it's very single stock focused, where we've had some shares that have pulled back by double digits, others have been up by double digits, and the equal weight S&P 500 was in new positive territory, but the Nasdaq 100 was down by 2%. And volatility has begun to push upwards, but not nearly enough to represent or to reflect the kind of single stock volatility that we've had. Then silver prices were down nearly $9. I was stopped out of my long position at a $4 profit, but this is certainly a very volatile environment. And gold was also in negative territory. Oil was in negative territory. And I think a lot of what's going on right now is just outright panic about what is likely to result from the acceleration in the capabilities of artificial intelligence. Now, I thought it's particularly notable that the Claude Code product has been on the market for nearly a year, but its capabilities improved significantly about 6 months ago. And it has taken about 6 months for that to enter the public psyche. And now we're getting people panicking because we've had significant drawdowns in several of the software as a service shares. And now people are starting to think about timelines, because a lot of the money that was being invested over the last several years was on the back of the assertion that artificial intelligence was going to be a big deal and that it might be disruptive in the future. And we still had several more years to run before the data centers were completed, and that this big build out of infrastructure would eventually contribute to a big uptick in the supply of AI-driven products. But with Claude Code, what people are now starting to worry about is that the timelines are significantly shorter. And therefore, the threat to the reliability of cash flows is immediate. And that a lot of the leverage that has been built up and the debt that's been built up and the kinds of companies that have been buying them or buying software companies, leveraging those balance sheets and then relying on the reliability of the cash flows to fund the debt that's been taken on, those are the kinds of